We are seeing some strength in the Asia session, despite all of these headwinds, whether that's US data, the New York Manufacturing Index, for example, whether that's the Chinese data set that we just heard about from Jill and how disappointing that was, whether that's tension around the debt ceiling, all of those negatives. On the other hand, you have Japanese stocks doing very well, and as a result, the mood in Asia not so bad. What do you put all of that down to?
Well, the mood in Asia has deteriorated. I should kind of qualify that. But you're right. It is true, Anna, that we are dismissing a lot of the negativity out there. I think, first of all, on the debt ceiling, it shows that everyone feels they have to talk negatively until there's a deal. Everyone's aware that kind of the game theory situation here, that this is negotiations. So I think the negative comments from McCarthy last night were kind of dismissed as he's not going to promise anything until he gets to talk with Biden and we get those crunch talks. So the debt ceiling is still the really big issue hanging over markets, and people are really withholding judgment until we get clarity on that. And we expect to get a lot of clarity either way today. Either they really genuinely aren't close, or we're going to get some positive headlines. That's kind of restraining people. As that is dominating the data, so I think that's the big thing. The other side is that Fed members have been slightly undercut for a while by the data story, and markets have gone, you know what, we don't believe you. We're going to run with the data. The banking crisis is too strong. And ultimately, if the data holds up in terms of the economic strength, then they'll start listening to Fed officials again. Now, over the past year and a half, markets have been wrong to doubt the Fed in terms of their hawkishness, but we'll see what happens this time around. And finally, on the weak data out of the US, it was a second-tier data point, but it kind of feeds into that underlying view that the markets are already quite negative on the economy. The reason they're positive on markets is because they think the Fed will capitulate on policy.
OK, and you're right that things have deteriorated a bit in Asia, and one of the things that's deteriorated has been Chinese stock performance. It had been more mixed, at least earlier on. What stood out for you from that data set out of China? Because as we were hearing from Jill, industrial output, retail sales, fixed investment, all coming in below estimates. But actually, I also found it interesting that the Statistics Bureau talked about how they're not in deflation, but they are facing insufficient domestic demand. We've seen some very low inflation prints coming out of China. What has been standing out to you from this data set?
I've been talking through with my colleagues, and I think one of the points is that, yeah, look, this is disappointing, but it's disappointing, extremely high expectations. Yeah, these aren't the numbers of a weak economy. You know, we talk regularly on the show about the data we get through in Europe and the UK, even US yesterday, and it's a completely different picture. These are economies that were delighted that they're avoiding recession. These are the figures of an economy that's still trending at growth somewhere around the 5% area. I mean, it's much stronger than the Western world. And I think that's the important context to have here, that maybe this China growth story in 2023, and we've kind of long discussed it, is not the boom story, but it's still a sustainable story. And if they maintain numbers like this the rest of this year, China's going to still be growing in relevance the rest of the year. It's still going to be boosting the global economy, and it's still a strong story. And the domestic story will catch up just slower than some anticipated in the past.